All right, groovy music. Good. All right, so we'll get started here pretty soon. Let me know how the audio is. Testing 1, 2, 3 should be a-okay. But let's double check that. Okay, excellent. Okay, we'll get started in just a little bit. All right, everybody, welcome to Stock Analysis Friday. Great to have everybody here on this September 15th, 2023. All right, I'm going to go through the administrational items I need to go through before we get started. But for those here, go ahead and type your symbols in caps, and we're going to take a look at stocks and ETFs. So if you have any of those, feel free to type those in the comments area. And we'll go ahead and get started. All right, first thing I want to go over, of course, are the risks involved in trading. Like I always say, without risk, there is no opportunity. So the two really do go hand in hand, but you need to be aware of the risks. Also, the markets work in a realm of probabilities, not certainty. So there's no guarantees, and past performance does not guarantee future performance. Also, too, realize that we don't know your personal situation, so make sure you check with your financial advisor or whoever manages your money to make sure anything we talk about here is suitable for your situation. We're going to be looking at a lot of stocks, ETFs, and so forth that we may recommend, of course, and they may or may not be suitable for you. So definitely check with your financial advisor before actually going in with any real money. All right, so the other thing too is you need to realize and understand how to control your risk on each and every trade. And so we call that controlling your trade risk. And trade risk is really important. You need to do it on every trade that you make. And the reason for that is that the goal of that is to keep your losing trades small and let your winning trades run. And you have to have good risk control in order to do that. We can help you with that because I have several books that really focus on that. One's the Money Management for Traders book in front of you here, and another one is a Trader's Money Management System. Both excellent books. And so if you need help in that area, definitely pick up either one or both of those. I've got Elliott Wave Technique Simplified, published by McGraw-Hill, a very popular book on the Elliott wave. The Elliott wave is a form of technical analysis, and it can get very technical. So my purpose on this book was to simplify that process and give you some keys in there in order to quickly look at a chart and get some form of probability of the wave count you're looking at. So definitely check that book out if you like technical analysis and the Elliott wave. And then I have the survival guide for traders, which is a tremendous reference for all of us trading the markets from our own home. And then the Art of Trading was my first book that came out in 2008. And my publisher, Wiley, has asked me to do a second edition on that, a newer edition. And I'm working on that. And I got to tell you, the second edition, I think, is going to be one of the best books I've ever written. There's going to be a lot of great new information in there. And we're going to cover also many aspects of our new software since the first book came out. So those are available for you. And what I'm going to do is I'll put the link up to our Amazon page. That's where most people go to buy these. But if you go to Barnes & Noble, you can pick it up there. But in any case, I'll put the links up in the recording later today, as well as when I put the timeline up. Timeline is really good. I appreciate if Stuart, you're here. I appreciate your comments on that. And what the timeline does for all of you that probably know this already, but basically when you look at the recording, if you open up the description, you'll see the timeline listed on each individual stock we look at today. And so that way you don't have to watch the entire recording to get to a stock or ETF that may interest you. So you can check that out. And then of course, on the timeline at the end, we have the stock picks. So we go over those as well. All right, so make sure you check out that. When we look at charts today, you may see some things you're not familiar with. And that is software that I created and is offered through two websites, appliedrealitytrading.com, which specifically deals with our software. And then we have traderscoach.com, which we've had for, almost 23 years now. And we actually started in 1998 and then actually went live with it in a serious way in the year 2000. So it's been quite a while. And that's our parent website. So you can check out all our services there. And if you're specifically interested in the software, it's on both websites, but Applied Reality Trading is designed specifically for that. And we have charting software, which has got that row at the top. We have scanners in the middle, and we have risk control software that does trade size and things like that, as well as keep track of your trades at the bottom. So you may want to check out our software to learn more about that. All right, and also because of the way YouTube works, the more likes we get, the better we do. So please give us a like. If you want to leave comments here, you're going to have to subscribe. So please do that. And then finally, share it with other people. The more people we get coming here every Friday, the more stocks we can share and the more good ones we can uncover. Okay, so definitely be thinking about that. All right, so let me get out of here and let's get to the important stuff, which is the actual markets. All right, before I dive in here, a couple of things I do want to share with you here is my layout. Now, our software works on a variety of different charting platforms. For example, this is NinjaTrader you're looking at here. And I'll go over my setup in just a moment. But it also works on TradeStation, multi-charts, MT4 for you Forex traders out there, and MT5, and eSignal. All right, so those are the major platforms it does work on. Nice thing about NinjaTrader, for example, if you have a brokerage account like TD Ameritrade or something of that nature, you can import the data into NinjaTrader. So that is a nice feature of that. All right, so what you're looking at here are 3 charts, all of the same time frame. Okay, so the idea behind this is it's called multiple time frame analysis. And when we look at 3 charts, we're kind of dissecting the stock or whatever we're looking at into a short-term time frame, an intermediate time frame, and a long-term time frame. So our short-term time frame is over here. And this is what we call a 60-minute chart. And basically, each price bar you see here represents 60 minutes or 1 hour. All right, so that's considered an intraday chart. It's kind of looking at that market more closely on a shorter time frame. And then the chart in the middle, which is kind of our primary time frame, is our daily chart. So every price bar here represents a full day of activity, and we call this the intermediate time frame. Now, most of the charts you look at either in a magazine or usually online are going to be your daily charts. Those are the most common ones. And then the chart on the far right is our weekly chart. And here each price bar represents a full week of trading activity. So Monday through Friday, okay? So that gives us a long-term aspect. So when we look at a weekly chart, it tends to take the short-term noise out and gives us some type of clarity, a little more clarity on what we're looking at overall. Kind of as a better roadmap, so to speak, of where the market is going based on our analysis. If we look at the daily, we're kind of looking at entries, exits, momentum, and if we look at the short-term time frame, we just don't want to be going against the momentum on the short-term time frame. So that's called multiple time frame analysis. And then on here, you'll see our software installed. These little triangles you see are used for trend trading. When they point up and they're green, that's a bullish trend. When they point down, like here, that's a bearish trend. So that's called the ART software. So if you're interested in that, I'll put a link up in the recording for that as well. Then we have pivot points designated as reversals, and that's 1B, 2Bs. And then down at the bottom here, we have the OWL, which is the optimum wave locator, which is looking at momentum in a histogram format. And then the middle indicator here is called the precision trend filter, or PTF. And we use that for scalping and to identify tops or bottoms if they're in or not. And then we have the trend line master, which draws these trend lines on the chart, as you can see here. And then we have the emotional greed index, which puts greed bars at tops near pivot point tops and fear bars at the bottom of pivots. So that's also helpful. We use that for scaling out or into trends. So that's our layout. And I did want to go over this. Okay, so this is USO. Okay, I've got USO up here now, which is the oil ETF. Now, the oil ETF is a pretty popular ETF to trade in the crude oil. And it's very bullish right now. And we suggested a long position on this quite a while ago. And our target on oil is between 100 roughly and 126. And we get that target by going over to the long-term weekly chart. And it looks to us like a fib extension, which is a form of technical analysis we use for targets, puts the target on this up here. Now, from an Elliott wave standpoint, this could be a 3, a 4 on this sequence, and a 5. So there are 5 waves in a trend, so it should end at that target. So what does that mean to you there at home? Well, what it means is that, A, this is still a good possible trade for you. It's probably going to pull back. I mean, we've had a really big run up on the short-term time frame, so a pull back into the 70s here would not be unlikely. So if you wanted to wait for that and then go long again, you could do that. All right. However, if you wanted to go in now, that's fine. I'd put your stop right below this area here, somewhere in the below 60, just below that low of the price bar, and you should be okay to stay into the trend all the way up to that target that I mentioned before. Now, what does this mean though? Well, it's going to mean higher gas prices on the pump at home, okay? And if it does get up above the $100 barrel, that's pretty significant, okay? So we're looking at quite an increase in oil. Now, the other problem with that is that, companies depend on energy. And so if they're paying more for energy, which is what this chart indicates will happen, then that means either prices have got to increase or they have to make sure they have a demand at their current prices. And if they don't, they'll have to lay off people. So it may be a little bit tricky for the economy. And we'll see. Hopefully that won't cause a further recession, but we will keep an eye on that. You should too there at home. So definitely watch that. All right, and that's USO. All right, so I see some symbols coming in here. And Stuart, you see you're here. So let's take a look at DKNG. And this is one we've looked at before. All right, and we like it, okay? And it certainly seems to have moved in the direction we anticipated, because we anticipated it getting into this target. Now, this target's a little different than the one I showed you before, and that basically this is a corrective target. So after it reaches here, we got to be careful because it could sell off again. So how do you know when to sell? Well, that's the point of our signals that we have, our software we have. That helps us determine that. And so far here, the pyramid that we use for our stop, all right, and a pyramid is a triangle, is right below this area here. So the pyramids do a really good job at looking at price structure in the market along with momentum and draw, where those are key levels of support to put your stop, as well as key levels of resistance to further your entry. Okay, so that's looking pretty good. So I'd have your stop there. Now, I think it's going higher. Why do I say that? Because on the weekly chart, even if it pulls back a little bit like it did here, it should continue on up because the PTF is green here. So this PTF has roughly a 75% accuracy rate, not 100%, but 75, which means that it's most probable that the market is going to take out whatever the highest price bar is in that green area. And if we drag this over and for clarity, we can certainly see that the high is here. So we should get back higher into the target zone. So that's all that's saying right now. So I would stay with this trade. I would have a stop here because even if it gets up here, you can expect a reverse and hopefully we'll get a new pyramid to move your trailing stop up. So that looks pretty good. I'm not going to recommend it right now because I do think we're getting close to a top. And if you'd gotten in earlier, like you did, Stuart, would have been a great trade. But I think now it's getting a little near its target. All right, let's take a look at Triple M, which is the 3M company. And we looked at this one before as well. And this one here actually has a lot of potential. But I'm going to show you the benefits of using multiple time frame analysis with our software. So overall, we think if we look at the chart on the far right, the weekly chart here, overall, we think the market should eventually reach up here, provided the bottom holds, okay? So that could be a nice area for a target, and that's all the way up to 210 to 285, and we're sitting at 101. So right away, that's 100% possible gain, all right, if the bottom is in on this. Next, we have to see the shorter time frames and see what kind of help they are giving us. All right, so the daily, which is this one right here, is showing that we have a green PTF and green momentum. That's good, okay? So it should at the very least go higher than this according to the PTF. So that would put it on its way on a breakout on the weekly chart heading to that target zone. So that's good, okay? Let's go here to the 60-minute chart. And right away, we see a pullback occurring. We have a yellow colored forming bearish pyramid, but we have a red PTF and a red owl. So right away, that's telling us, okay, don't go in now. Wait for this movement down to finish on the short-term time frame and wait for things to turn green before going ahead and executing a long position. So this is basically saying here that this little bottom here, which is the same one as this one over here, okay, is going to be taken out. That's what this PTF is saying. This PTF is saying that after that gets taken out, we should see a reversal and go up and make higher highs. So now it becomes a point of stop loss placement. So I think if you're in it right now, where you want to have your stop currently is right about here, okay? Because that's the last key level of support before we broke out. So that's where you want to put it. When we break out again here, then you can move your stop up here. So that's my recommendation. So I'm not going to recommend this one now simply because let's see how much further it goes down before it ends. But I think this bottom should hold nonetheless. And I think it is an excellent trade. So let's look at that next week. And you can put this on a watch list, okay? You can certainly put that on a watch list. And that is MMM or the 3M company, right? So let's put that there. All right, good. Thanks, Stuart. All right. WRK. Let's take a look at that one. Give that a second to load there. All right, so this one is moving nicely off its base, off its bottom. If you go right to the weekly chart, you can see where that's heading there. Now, sometimes when we're not really exactly sure, because there's not a lot of history on this, it goes back to what, 2015, I think. And that in stocks, that's not a lot of history. So it's very tough to get a decent Elliott wave on the weekly chart for that. So when you don't have that kind of luxury, what we do is we use our PTF indicator as the target. And basically the highest price bar in this PTF is way the heck up here. So this looks like we should get above 60. Now, in order to get there, okay, you're going to have to wait a long time, okay, years to get there, because we're at 37. So that's a double your money here. And that's on the weekly chart. So if you're going to trade up to that target range, you have to really be careful to keep your stop a little further away than you would if it was a shorter term trade, right? So keep that in mind. Pyramid here has been nice. This has been a nice short-term trade. We had one back here, okay, but that's been taken out now. So when the PTF is green here, you know it's going up. Even after this pullback, you know the probabilities are it should take out this high. And when it does that, if the momentum does not stay strong enough, it turns yellow. All right, so you want to have your stop right under this pyramid here. I would stay with this because this is close to going green again. And let's see how much more of a high we can get out of it. I'm not going to recommend it because it's already excelled so far at this particular point. For a short-term trade, I wouldn't recommend it. For a long-term trade, I would, because your risk to reward is huge. I put my stop down here, prices are here, and there's your target. So you've got a good 2.5, I'd say, risk to reward in your favor. All right, so you calculate your trade size here. All right, so if you get stopped out, you're only losing approximately 2% or less on your trade, but the potential for 2.5 times that is huge on the remaining shares or contracts, depending on what you're trading. Okay, so not bad. That's a good one, but I'm not going to recommend it simply because it's getting a little far away on the short term, but I would recommend it on a long-term trade with a stop set for pretty far back there. All right, so that's one. Let's take a look at NET. All right, net really looking pretty decent here in terms of a pullout. Let's see how much history we got here. I'm showing back to about 2019. So on this trade here, again, another PTF indicating that this high had so much momentum that the probabilities of it eventually retracing back up there are quite high. So obviously you're not going to go long as it's coming down. But now the idea here is that maybe it is time to go long and try to catch that next major move up. So the lower time frames aren't too bad, a little volatile though. So you've got to be pretty careful with your stop at this particular point. I'd say at a very minimum right now, you're going to have your stop here, okay, at this very bottom. I know we have a pyramid here, but I would put it back a little further. It's pretty volatile. All right, so that's not too bad. We've got green here. We've got green here. There's nothing red that I see on any of the charts. So that's a good sign, okay? So I'm thinking not a bad one here. So let's put this one down as a buy, okay? All right, and the target on this is going to be above 200 long term. All right, let's see if we can get a shorter term target possibility. And I think probably we can, because what we can do is just go ahead and see what the retracement levels are from here to here. And let's yank that up a little bit higher. Let's go up here. So if profit taking causes a retracement up to that inflection point, you're looking at a possible high of around 108 all the way up to 151. Short term, well, you might have to wait half a year or a year for that. Okay, so it's not really super short term, but that's kind of the shorter term target. If you're going to wait for the PTF, you're going to be in it for many more years. Okay, that's kind of the deal with that. All right, one more here, ZM. Let's take a look at that one here. Okay, so you're doing an excellent job, Stuart, of looking at bottoms. I'll tell you, stocks, when they trend, and then when they don't, they tend to get into a pattern where they drift. And we've had this drifting, but that's okay because the longer it drifts, the more closer it is to trending again. And so that's kind of what we like to look at when we look at potential trades. All right, not so bad. So let's analyze this weekly chart. Again, we're going back to what, around 2019 on this. The only thing we have here is up and down. So we have a yellow PTF, so neutral. So no help from the PTF on this one. We do have a bullish pyramid forming here. That's a big deal. Notice how great the short trade would have been here. But now things are rolling over. So the only thing here is we've got a little bit of red here, but that's okay. The pyramid stops pretty much at the bottom. We've got green here, we got green here, and green here. So I'm going to say this is a go. All right. I'm going to say an early entry is warranted here because you have green PTFs in the short time frames. You have green owls. And even though you're going against a very, very slight owl on the weekly time frame, I think that will go green, especially since the short-term charts are so bullish. So let's put down ZM as a buy. Okay. Where's the target on this? Well, good question. We can either use the weekly chart or the daily chart, but it's going to be pretty significant. Even a very conservative target on this is going to yield you a great potential. So you're at 71 bucks. So if you just retrace this move up we've had here that occurred in 2022, you're looking at a 191 to 273 target. So I think that's worth the risk to reward, don't you? Okay, so ZM is probably the best one for today so far. Nice job. All right, Al, how are you? NTRA. Let's take a look at that bad boy. All right, short. So you're saying short on this. Here, I got to remember to do this. Put your pick there. Okay, so short on this one. All right, let's take a look and see. I assume it is probably, knowing you, probably a short-term trade, right? Okay, so you might be going off the 60-minute chart, but you could also use the long-term chart. All right. So basically, the PTF again helps us with determining whether we want to really be long or short. And you do want to be short. And it's saying that this bottom is not the final bottom. Okay. So that's what that is saying. This is coming down some. The actual chart in the center, which is our daily chart, isn't as bearish as some of the others because it's kind of in this oscillating channel. But let's just see where a possible retracement on this is, because it could be in a situation where it's still moving up on a retracement and not quite ready. Okay, so here's just a little information here. So when I draw a retracement in this is usually an area, this is called a fib retracement. And this is an area that we usually see markets go to when a bottom is in and you get a retracement trade. All right. So the bottom may not be the final bottom, as in this case. So that's why you draw this in, and that becomes a shorter term target. And we haven't hit that yet. All right. So 70% of the time, markets do this. They retrace to this level. And this is calling for a 3 here. So if this is a 4, after this is hit, you'll get a 5. All right. So I get why you're short. My only thing is here is hopefully you're going to have your stop high enough that if it goes into this target, you don't get stopped out. But 15% of the time, you have a failed wave forward. So I get why you're short. I put my stop here. If you get taken out, chances are we're going back up into that target. And you're going to have to go short again because you'll be stopped out, which you should be, and then wait and see how high we get in the target to limit your losses before going short again. So I'm actually going to say no on this one for a suggestion. And the reason for that is, even though this is red, we're so close to the PTF target, doesn't give us enough profit potential. We've already been pretty far down on this. We're seeing bullish divergence here. All right, so I'm a little concerned that this retracement, bullish retracement, is not over yet. So that's my concern on that one. Okay. and that is NTRA. All right, let's keep going here. All right, Ford, F. All right, so we've looked at this before. We've liked it for a long trade because we think we've got a bottom in Ford, and let's walk through that. So if this was an impulsive wave up, let's say a 3, all right, then this was the wave 4 target, and we hit it, right? And then it has been bouncing along, but this bottom is held. This bottom is held, and we have a green PTF indicating Ford should once again get above roughly 26, right? And we're at 12. So that's a double your money possibility. So in this case, let's look at the lower time frames. One of the things we like about Ford right now is we just had a rollover here into a green optimum wave locator out. So the momentum now has turned bullish, and we have a pyramid. We no longer have any red. This is neutral, so that's okay to go long or short on that. And this is indicating a long trade. This is good. This is good. So I'm going to put Ford on the buy list, okay, with a target, believe it or not, pretty high up. So this is one you can probably be in this one for a long time. All right. So we're trying to get an early entry on this. So I'm liking it. Okay. All right. Let's take a look at GM. Al is long on this bad boy. And see, okay, GM's a little different than Ford. So the problem with GM on this one is the red PTF over here. Okay. Now it's close to going green. So, okay. That makes a difference. If I was waiting to go long, I'd wait for that to turn green. I would not be long on it now because it's technically still red. Okay, so that's part of my rule base is I'm not going to go against that indicator. All right, so simply because it has a 70%, 75% probability, so I don't like to go against it. So I'm not so sure on this one. I definitely are seeing a basing pattern here, but not as good as Ford. Okay, so if you had to choose a car manufacturer for a position here, I'd choose Ford. All right, so I'm not going to recommend GM. Okay. All right, Alexander, Meta. Let's see how Facebook is doing today. All right, give that a second to load. All right, so Meta doing really, really well. Okay. We had a short-term target here when we looked at it earlier, blew right by that. Okay, and it's still going up. So that's an indication that this was not a correction, that it is now an impulsive wave. Okay, so that's why you don't want to just get out when you get to a target zone, but you want to have your stop fairly close, but keep going. If the market goes up, keep going with it. All right, so not so bad, okay, but I can't recommend this one as well, simply because at this particular time, all right, we generated a red PTF over here in August, a few weeks ago. So that is indicating that it's in a correction right now. So here's the deal. If we draw in our retracements here, okay, it's probably a 3 that just ended. This is probably an A. And there's 3, normally 3 waves, not all the time, but normally. And then it goes down into the target. Okay, so that's your 4 target. So I wouldn't be long on this one. Okay, now if you wanted to think about a short, maybe. Okay, but again, a couple things to consider. All right, one is this is green. All right, and this is green, so I'd wait for those to go red. I'd cut your position in half because this is still pretty strong over here. So this is basically saying after the correction, we're going to go higher. So, as long as you get out here, you could go with a full position, but make sure you have your stop in case, it's not yet in a solid wave 4, but I think probabilities indicate it is. Okay. So that's kind of what I'm thinking on that. So possible short trade. I wouldn't do a long trade at this time. It's due for a profit taking correction. All right. CH, would I recommend it now? No. Not with green PTF, green owls in the short time frame. All right, CHWY, CHWY. Let's see how we get. Take a look at that bad boy. So you're watching this one. Okay, well, if you were short on this one, you'd be doing really well. If you're long, you'd be feeling a lot of pain right now. All right, and you don't want to be long now. All right, so continue to watch it. I know you're watching for a bottom here, but I think we got a little bit further to go, okay, on this one. Where? Well, let's take a look here and see if we can get any help here. Possibly if we draw some extensions, we're looking at probably maybe down into the single digits, okay? Then hope it won't go bankrupt, all right? So watch it, but I wouldn't trade it. All right, XOM. Let's see how XOM is doing here. On mobile. So, you know, as I said, oil's going up, and usually when that happens, you get an uprise in the oil companies, and so you're getting that now, okay? Again, what we're kind of looking at here is, you know, it's had a nice run up. Same thing with USO. So it's due for a profit-taking pullback, but that doesn't mean the trend is over, because it can go like that, right? So would I go long here? No. You got red here. That's keeping me from long. You've got a pretty extenuated bearish divergence building in this owl here. Same thing with this owl here. And we haven't had a big correction yet. You really just haven't, okay? Because it needs to get down into this area. Could it make a new high before correct? Sure. All right, but it's Russian roulette. Okay, yeah, it could, and then fall down. So again, the risk to reward is not really here, even if it makes another high. So is it more risky to get in here or get in down at the beginning of the trend after it changes? Here, right? All right, so too much risk up here. So stay away from that one, okay? That's ExxonMobil. MA, after the correction, we'll take another look at it. MARA. All right. Let's see how far back. Okay, so this one goes back pretty far. All right, 2013. Had a blip up and a blip down. So what is that? Well, that's a good question. All right, I'm not exactly sure. Do I like this now? Not right now for a long trade. Too late for a short trade. But let's take a look at it later on. We may be seeing a bottoming here. Okay. But this is red still, and it really needs to get above here, or at least here, which is the same price, okay, before we can get confident that it's not going to stay in this volatile bottoming area, okay? So I would not do that one yet, but, you know, if you want to keep that on the watch list, you certainly can. UNG. All right, this is the ETF for natural gas, and let me put your picks up here. So this is the one for natural gas, and we actually like natural gas because this one showed some bottoming efforts earlier on. But again, you have to put your stop at the very bottom. If you're going to get in early, you've got to expect the volatility, even if you're right before it goes, right? So if you have your stop too close, you're just not going to make it through the volatility. So keep the stop below. Even this pyramid's fine right down there. I would not go into it now because we got red here and red here. If you're in it, well, you're just going to have to suffer through holding it and have your stop there. And I'm hoping that, because I recommended this as a buy several weeks ago during this period here. So I think we have a bottom here, all right? But for those not in it, let's wait for it to bounce back up again before putting you in, okay? If you're in it, don't sweat it. Just keep your stop there. I think you'll be okay. All right. So I'm not going to recommend that new right now. All right. NKLA. Let's take a look at that one. You are long on this one, right, Alexander? Okay. So let's see what's cooking. All right. I don't know your time frame on this. This is obviously moving up here on this time frame with the green. This is red, however. Okay. So what we're looking at is not the beginning of a new trend unless that changes color. Unfortunately, on this one, your target's got to be right around there, which isn't too bad for a penny stock. So 189 to 258. So if you get into that target, keep your stops extremely close, because that may be all you're going to get on this. Okay. This is not a buy and hold at this time. Okay. So that is NKLA. All right. OC. Let's take a look at Al's here for OC. Okay. We got some good ones already today. So not bad. All right. OC. All right. Moving up as well. All right. Again, classic example. Is it better to buy here or here? Which is more risky? Here, right? This is more risky, right? Because it's late in the trend. So that's when profit taking comes in, and chances are you're not going to have your stop far enough back. So you're going to get stopped out, probably a loss if you get in there. So I would wait for the pullback on this. All right. That's what I would do. And you're starting to see bearish divergence here. Okay. You've got red here. No longer a red there. That's a good sign. So that's the only problem here, which kind of signifies that we may be getting ready for correction. This is very strong. So this is only going to be a correction, and then it's going to go up. All right. So let's see. Let's see those smaller time frames get a little more positive before thinking about a long position. And I would like to see this thing correct decently, probably down. Well, I'm going to put it way down here. All right. Into that zone there. Okay. So I would hold off on that. Okay. All right. Anybody else? I think I went through them all, right? Did I get them all? What, time flies, right? Already been live for 40 minutes. All right. So anybody else have anything else? Going once, going twice. Let's take a look real quick. I want to take a look at the cryptos a little bit. Let's take a look at GBTC. All right. This is one that we actually think there might be a significant bottom in here on GBTC back on here in the weekly charts. So we had a little bit of a move down, and now it's starting to pull back up. So GBTC is actually on our buy list, but and it just had a decent pullback. So I think you'll be okay on this. But cryptos aren't for everybody, and this is a ETF for crypto. Okay, so you know, if you don't want to get involved in the cryptos, that's fine. But I look at these as like I do any other chart, and you know, it went all the way up, all the way down. So it may be swinging its way back up. We don't have any PTF help here. All right, so this is purely a bottom play. Okay. All right, so let's take a look at Coinbase. This is another one here. Okay, this one does have PTFs to help us on both the daily and the 60, and it's in this retracement area. So this is looking pretty good. Our target is 162 to 243. Okay, I would go ahead and go long on this one too, if you're into this crypto stuff, because with this green and this green, even though this is slightly red, this should bring that green. So I think you can get an early entry in now fairly safely. Where to put your stop? Under the pyramid. Okay, it's got a beautiful stop right there, and that's right under the fib retracement. So even if it meanders or lingers before it goes, this stop should hold. And if it doesn't, you want to get out. Okay, so that looks pretty good. So that is this is coin. Okay, so this is coin. So coin, I'm putting down as a recommended. Okay. RIOT is another one people like to play. That's the blockchain mining company. Okay. This one's got a red PTF though on the daily. So I'm kind of, if you're in it and you're doing a long-term play on it, this is probably not going to give you any trouble. Just keep your stop down at the bottom for right now. All right. After this move down is done and we go back up, then you can move your stop up under here or wherever it bottoms. But this is showing that we're going to move down a little bit more. So I would not go into this now if you're not into it already. That's RIOT. Okay. All right. Anybody else? How about real estate ETFs? Let's take a look at our friend over at CPT. There's many types of real estate ETFs to look at. Some that deal with commercial, some that deal with residential, and some that have a mix. This is a general U.S. ETF on real estate, residential. And, you know, it's very short term, okay? So it's still coming down a little bit. We may get a little bit of a move up, but it looks pretty bearish at this point still, okay? We're seeing bullish divergence in the owl on the weekly, so we may be getting close to another type of bottom here. So we're going to keep an eye on it. If the economy goes into a recession, that's going to be bad news for real estate, simply because, you know, when you break it all down with real estate, there's two major components of it: interest rates for mortgages and wages. And when real estate gets out of proportion, where people cannot afford housing, then it can't be sustained. And I think we're at that point right now. So I'm actually kind of bearish on real estate. And also too, investors, you know, if you're going to be buying any type of real estate now, your interest is going to be twice as much as it was a year or two ago, right? So that's going to cut into your profits. And so that's a problem for investors. They have to make sure they can cover their nut and make a little money. And it's getting harder and harder to do that now. Also, too, if we do go into a recession and people lose jobs, well, who's going to be buying these homes, especially at these inflated prices? So real estate, I think, is due for if you look at the CPI versus the Case-Shiller index at this point, they are way out of whack, even more so than in 2008. So I think we're due for a fairly significant move down before we see any positive coming in the real estate market. So I think that weekly chart, we may see some type of slight move to the upside, but then I think it's got another leg down before that PTF is going to be realized on the weekly chart. Okay, so keep an eye on that. And you know, real estate's very local, so it all depends on your area. But certainly, it's a low supply right now, which is keeping prices up. But also, too, the demand is low. All right, so real estate's not doing too much these days. All right, let's go. Keep going here. All right, Uber. Let's take a look at these for Alexander. All right, UBER. UBER. So we got Uber. All right, so Uber, we projected a while back to at least go to this target range, right? But it's still going up. We got a green PTF, all right, saying probably even if we get a pullback of any type here, we're going higher. So we got bearish divergence building. Again, here's my classic scenario. Is it better to buy here or here? All right. So if you get in late to the trade is actually more risky because you get stopped out on profit taking. Okay. So that's my only problem with going in now. Okay. So I would not do that. ABNB. Let's see what we got there. Okay, so we got a red PTF on the daily, so and pretty significant. So I think this correction that we're in here is not over, according to this. If this changes and goes green, that changes things. But looks to me like we're going to take this bottom out again, which is a little concerning for a long position. So I don't think I would do it. Plus, there's not a lot of history on this thing. Only goes back to what, 2021. Okay. So A, B, and B, I would not do. All right, Eleanor, how are you? Okay, let's get you up for Apple here. All right, well, the NASDAQ can certainly thank stocks like Amazon, Apple, Google, because those are the ones driving the NASDAQ to over 30% year-to-date gains. If you look at the Dow, you're not seeing those type of gains. So the big cap tech stocks is where all the money's been going into. But this one now looks like it's still in a correction. All right, look at the pyramids. Look at how beautiful these things trailed the stops up and kept you in this trade. Finally stopped out here on this pyramid. Can't have it any more than that. And then after 5 pyramids in a row, the trend is mature. And sure, that's, you know, folded over there. All right, so now you got an MP, which is a minor pyramid indicating a change in trend. And that's what we're seeing now in terms of the correction. So we're in a correction right now in Apple. Doesn't mean, it's not going to go higher, obviously, but it's in a pullback scenario right now. So we're in the target, and the 60-minute chart is saying we got one more leg down probably to go in this target. Doesn't mean we can't get a little push up, but I think probably one more leg down. And if we draw some extensions here, approximate extensions on this short-term time frame, we're probably going to work our way down to 170 to 163. So I think we're going to go down a little deeper into the target. This is green. So after this, it should take off again. Okay. So a little pullback still. All right. I wouldn't go into it yet, not with that red PTF on Apple. Okay. If you're long and you have your stop far enough away to survive this further down, you'd have to have it under 164. All right. Then that's fine. But otherwise, you want to be out and then wait for bullish momentum to come back in. All right. Thanks, owner. Okay, Al, let's take a look at your bad boy, QS here. All right, so we've looked at this one before, okay, and we liked it before, all right? So classic basing, all right, green PTF, pretty high up. Short-term target here. All right, long-term target way up there, not a lot of history, all right? The interesting thing is we have a long-term target here, not a long-term, short-term target here of 14, and you're at 7. That's a double your money just to get up here. That's decent, right? So, for you to get back up here, you're going to have to hold it for years, probably. But for you to get into this scenario, not so long, okay, within a year. So we got green, we got a little red here. So, this owl here, I like to usually see that a little closer to the 0 line before I recommend things, even though this is green here. So if it was me personally, I'd like to see another 3 or 4 days on this to see if that owl can get closer to the 0 line and go green before I take a trade on this, okay? No question, a long trade is the way I want to go. I just want to make sure that I don't get stuck in a sideways channel a little longer and, therefore my money's dried up. So let's put QS on a watch list because of that. And if you're in it already and you got in earlier, I get that. But your stop, again, this is your first big leg up. So your stop needs to be right at the pullback point here, okay? Pyramid is here. Hopefully that'll hold there, but this would be okay. This should be okay. All right, so that is QS. All right, let's take a look at PSTG. PSTG. All right, again, I wouldn't take a long position here right now. Again, I don't like what I'm seeing here after a big run up. And I'm seeing actual bearish divergence because this did break above here. So I'm thinking maybe it may be in a corrective stage still, okay? So I'd stay away from that right now. All right, very good. Good job. All right, so anybody else? Anything else? All right, let me just recap then. So we have WRK. That's a long-term buy. So let's type that one in. WRK. All right. You're gonna have to hold this one for a long term. So if you're not a long-term person, this is not one for you. But if you are, this is a good one. NET. Okay. We like this one as an immediate buy, and our target is right up here, and it looks pretty good. Okay, for the most part. All right. ZM is our favorite. This is our one we like the best today. And this one has tremendous potential because we think the trend up is just beginning. And if that's the case, you're going to have a nice ride. Okay. So liking this one a lot. Okay, that's ZM. F is another one we like, which is Ford. Okay, it's pulled back, so we like that. And now things are starting to turn more bullish. So we're okay on that. All right. So GBTC, the cryptos, for those that like cryptos, we think GBTC is looking okay now. Had a little bit of a turmoil there as it was coming back, but the bottom held, and I think it's going back up. And then we have coin as our next crypto that we like as well. So those are our buys, okay? These are our buys today. Same thing with this one. We think it's going back up after a correction. So it looks pretty good to me, okay? Looks pretty good to me. All right, so let's take a look quickly. I'll just leave it on the actual, let's take a look at some of these intraday time frames, because when I end here, I always like to just let these unplay here. All right, so we've got a PTF trade possibly down here on, this is the futures market. So this is the micro market for gold, and it's called MGC. And we're using the December contract right now on this, okay? So let's take a look at this. And that's a possibility. So your target would be down here, okay? So that's a possibility. All right, if we were day trading, when we do run a day trading room, so this is the kind of things we look at. MES, let's take a look at that. This is a very popular one. All right, problem is it's showing a correction only with a red PTF, so we're not going to be trading that. However, all right, however, this is what I'm looking at. So just so you know, this is a 5-minute time frame. This is a 1 minute and 15 seconds. So very short time frames here. So what I'm liking about this one is that I wouldn't go long here. There's too much momentum down. But if it corrects into this target, I'll short it again, okay? So I would wait and see if we get on up there first. Might not. All right, I imagine we're pretty bearish on all the equities right now, okay? All right, so this one here, this is looking pretty good for maybe a potential trade to a correction area. Okay, we have bullish divergence, extremely bearish, all right? So this is not going to be one you're going to want to hold for most of the day. This is just a quick scalp, so to speak, on the correction. And I would be pretty conservative with this. So let's draw these retracements in from about here to here. All right, so that's one. If it's a shallow correction here, so you still got good potential here. So as soon as this goes green, we would be looking at a possible long trade to this correction and then get out. Trail our stops up close because this is bearish. Also do cut your trade size in half for this, okay? Simply because you're going against the long-term trend. So that's a corrective trade. So I think I'll just leave it here. Let's see how this baby unfolds. It's very possible it could make another low, okay? So we got to keep an eye on that. That's why we use the owls to keep us out on these 2 time frames for timing. So we've got a red owl in the 60 minutes, so we're not going to go long until that changes green. And if it keeps coming down any further, this green owl on the 1 minute is going to turn red. So then it's going to test the bottom, and we'll be glad we're not long if the bottom doesn't hold. That's how we use those indicators to help us time our entries even when we day trade, okay? So keep that in mind. All right, that is it, okay? So we're all set for today. Stuart, your ZM was the winner today, so good job on that one. And we'll be back here next week. And thanks, everybody. Don't forget, give us a like. The likes help us a lot. All right, so check this out. We just had a red owl on the 1 minute. And look how deep that owl got on the 15 seconds. So we're glad we didn't jump the gun and go long. So when we have a bullish pyramid, we still do not take that pyramid unless the owls are in our direction, okay? So that's really important. All right, have a great weekend, everybody, and we'll see you back here next week. I'll put a little music on, and then I'll end the room in about 5 minutes. Okay, so now the owl just turned green. Okay, so we got green, green, we got no red here. So you could go long with the anticipation of going up here. Okay, that's your target. Stop, you want at least here, or better yet, just keep it right at the bottom. And don't move it up until you get closer to the target. All right, that would be okay. You just got a new pyramid, P pyramid on the 60-second. So that's looking pretty good. You probably will get pullbacks here. We do need to get above this high here. So hopefully that'll happen. But I think this looks as good as it can look at this point. All right, I'll put the music on. We've got to end the room here in a couple of minutes.
Thank you for calling Southwest Gas. Para servicio en español, oprígase. If you're calling to report a gas leak, press 9 or call number 11 for a gas station. Or if a member of your household is infected by the COVID-19 virus, press 3. Contract. Press 4. Builder and commercial customers, press 5. To authorize or cancel receipt notification. For information regarding the California Emergency Disaster Program, California Consumer Privacy Act, or the Arizona Customer-Owned Yard Line Program, press 8 to speak to a representative.